Hi everyone, welcome to part 4 of Technical Analysis Made Easy series. In this video, I am going to cover types of candlestick patterns. Candlestick patterns are often used by traders to set up their trade mainly in trend reversal scenario. So during our previous discussion, we discussed on the formation of candlestick, but I'll just quickly take you through it again. So this one over here is bullish candle and over here is bearish candle. So the property of a bullish candle is the closing price is always higher than the opening price. So let's say it's a candle for a day. So when the market opens, the traded price was, let's say, 90, and when market closed, the last traded price was 100. So opening at 90 and closing at 100. This one over here is the shadow, the upper shadow, and this over here is the lower shadow. So upper shadow indicates the highest price traded that day. So let's say the highest price traded that day was 110 and the lowest price traded that day was 80. So now this is the candle for day one. The next day, since the market closed at 100, let's say the next day the market opens at 100. Now during the day, the the highest price traded that day was again 110 and the lowest price traded that day was 80 and market opened at 100 and closed at 90. So this is bearish candle. So in case of bearish candle, the closing price is always lower than the opening price. Okay, now let's switch to candlestick pattern, the different types of candlestick pattern and how we can use the candlestick pattern to set up the trade. So there are two types of candlestick pattern, bullish candlestick pattern and bearish candlestick pattern. Now within bullish candlestick pattern, you may find different types of candlestick pattern. So one candlestick pattern, two candlestick pattern, three candlestick pattern. Like there are over 100 of candlestick patterns. However, just for the sake of simplicity, we will only consider 10 candlestick patterns. So 5 candlestick pattern for bullish candlestick and 5 candlestick pattern for bearish. Over here I haven't considered any three candlestick pattern, but maybe in some other video I can cover all types of candlestick pattern, but in this particular video I am covering only one candlestick and two candlestick pattern. So let's start with one candlestick pattern, that is hammer. So the property of hammer is you will see a very low body over here, and then you will see a very high lower shadow and there is no upper shadow. So it could be formed in bullish candlestick or it can be formed in bearish candlestick. Okay, so just to make you understand better, I will just take an example of hammer. So what we are studying is bullish candlestick chart pattern. So bullish candlestick chart pattern means if there's a downtrend and if you find a bullish candlestick pattern, then it may indicate that the prices can reverse or the prices may reverse and then change its trend. So as you can see over here, so the prices are going down. Okay, there is a downward move and then there is a hammer. So again the property of hammer is a small body and then a very high lower shadow. So there should not be an upper shadow, but in terms of if you compare with the lower shadow, the upper shadow is insignificant. So a little upper shadow or no upper shadow can be considered under hammer. So you will so this is hammer, and then next day what happens is you see a green candle, and then green candle is a confirmation. So as we saw in a slide that the hammer can be can be a bullish candlestick or a bearish candlestick. So in this example it's a bearish candlestick, but the property is the next day there should be a green candle, and then this green candle is a confirmation of price reversal to upside. Let's see some other example. Okay, so as you can see over here, this is hammer. The price is, there's a downward trend. There's a hammer appearing here. The next day, there's a green candle which act as a confirmation, and then there is a price reversal. Prices started rising. Okay, so there was a downward trend. You see a hammer over here, and then a green candle for confirmation, and then price reversal. So this is hammer. The second candle that we're going to discuss is engulfing. So the property of engulfing is that you will have a small bearish candle, and then you will have a bullish candle. But always remember, I'll just try to explain you in terms of opening and closing price. So let's say the market is going down, and then this is again a bearish candle. But next day, what happened is, so here is, this is your opening price, this is your closing price. Next day, what happened is that market, there's a gap down opening. So this is the closing price. So the next opening price should be somewhere over here, but instead of that, the market opened over here, right? So this is called gap down opening. So there's a gap down opening, and when then you see a very big bullish candle, and then this bullish candle closed over here, which is higher than the previous open. Okay, so if you see something like this is called engulfing, and then again it is a bullish uh, chart pattern, which indicates that if you see this candlestick pattern in downtrend, then it indicates that the prices can reverse, or the trend can reverse. But again, the basically for the confirmation, you need a green candle after that. So let's see one example of engulfing candlestick as well. So you have a small red candle over here, and then you have a big green candle over here. So that is engulfing. A next candle, it's a red candle. So basically, in terms of, if you are in a position to make a decision, I would recommend you wait for a green candle and then take a trade. But in this case, it's a red candle. However, the next two candles are green candle and breach the high of this red candle, which again indicates the trend reversal. Let's see one more example. Okay, so this one is bullish engulfing. You have a small red candle, gap down opening, big green candle, and then the high is higher than the previous open. So this is bullish engulfing. Now the third candle is harami. So the property of harami is, it's just it's a mirror image of engulfing. So you have a big red candle first, and then you have a small candle next. And the third day, you should have a green candle for the confirmation. So what you have is, you have a open, and then you have a close, and then the next day you have a gap up opening, and then the market closes in green. So this is harami. So harami is again two candlestick pattern. Let's see few example of harami. Okay, so over here you have a big red candle, then you have a small green candle. Third day it's a red candle, but if you have a green candle, it is best in terms of confirmation. But the next day there's a green candle, and it breached the level, it breached the high of first candle, so it's a confirmation that you can take a position, and then there's a reversal. One more example, one red candle, then gap up, you have a small green candle, the next day there's a confirmation, you can buy, and then there's a trend reversal. So bullish trend. So higher highs, higher lows. One more example, a big red candle, small green candle, next day confirmation, trend reversal. The next candlestick pattern is piercing. So now what is happening in piercing is that first day you have a red candle, a big red candle. The next day you have a gap down opening. Okay. So this is the closing price, and the next day the market opens over here. So this is a gap down opening. Now what happens is the next day the market opens, and then the prices start increasing, and it closed above, somewhere over here. So the property is that if the prices are closing over and above the half or 50% of the previous body, it is said to be piercing pattern. Okay. So I'll just give you again, I'll just show you a few examples. Okay, like what we discussed, a very big red candle, gap down opening, and the close is above the half body of the previous candle. Uh, let's see some real charts. Okay, red candle, gap down opening, then it closes above the 50% or above the half of the body of the previous candle. Again, a red candle, gap down opening, and it closes well above the half of the red candle, which is a good sign. The next candle, there's a green candle, and then a trend reversal. The next candle is a doji. So doji is again a single candlestick pattern. So this is what you have to look at. So if it is not clear here, I'll just show you over here how doji looks like. So this is called doji. So doji, basically doji has a very small body and a, a very high upper shadow and lower shadow. So in this case, it has a very small body, but in some cases, uh, you may find that there is no body at all, which means that the opening price is is equal to closing price. So let's say market opens at 100, closes at 100, and then made a high of 120 and a low of 20. Sorry, made a low of 80. So in that case, there is no real body. So now let's see how it works. So let's see candlestick pattern. Okay, so downward trend, then you have a doji over here, right? The next day a green candle, which is a confirmation, and then the prices reverses. Again over here you see a doji over here. Next day, not a green candle, but the opening is higher than the previous close, and then trend reversal. Okay, so doji over here, then the green candle confirmation, and then price are increasing. So this is with doji, and these are the 5 bullish candlestick pattern. And like I've told you, there are many candlestick pattern that you can find. But in this video we are covering the major five bullish candlestick patterns. And similarly, bearish candlestick pattern are the like the mirror image of the bullish candlestick pattern. So for example, in case of bullish engulfing, you have red candle first and then green candle. In case of bearish candle, you have green candle first and then the red candle. Okay, so now let's see how it appears on the chart. So this is engulfing. So you have a small green candle first and then a red candle. The next candle for confirmation should be a red candle, and then the prices have started declining. Similarly over here, a small green candle, a big red candle, the next day the red candle as a confirmation, and then prices start declining. Now hammer again. So hammer, basically if you see hammer at the bottom of trend, then it indicates the bullish reversal, and if you find a hammer at the top of trend, then it indicates bearish reversal. So let's see hammer. So this is a hammer. Okay, a small real body and then a large upper body, and then next day red candle is a confirmation and prices started declining. Again a hammer, next day red candle is in confirmation, prices started declining. Similarly with harami, so in the bullish candlestick pattern, in the harami you have the red candle first and then the green candle, and in the bearish candlestick you have the green candle and then the red candle. So let's see few examples of harami. So you see you have a green candle and then small red candle, next day red candle is a confirmation and then price started declining. Piercing again mirror image. So in piercing you have a red candle first and then you have green candle, you have green candle first and then a red candle. And in case of a bullish candlestick pattern, you have a gap down opening, and in the bearish candlestick you have a gap up opening. So you have so basically market is moving up, and then again you have a green candle, but next day what happens is you have a gap up. So basically this is the closing price over here, and the next day the opening price is somewhere over here. So there's a gap up opening, gap up opening, and then prices started declining during the day and closed below the 50% half body of the previous candle. So this is piercing. In case of bearish candlestick pattern, so we'll just again see few examples. So if you look over here, there's a green candle, and then next day there's a gap up opening, and the price close the market close at around below the 50% half body level of the previous candle over here. So this is piercing. It's also called dark cloud cover. Just to avoid confusion, you can call it piercing. And then doji. So you have upward trend over here, a doji, and then next day red candle as an confirmation and then declining of the prices. So these are the candlestick patterns that I wanted to cover in this video. I hope you had a great learning session again, and I hope to see you in the next video. Thank you so much.